the support and resistance areas or support resistance zones. What are support and resistance? I've mentioned support and resistance lines over and over and over again. Support and resistance levels are price levels where market movements shows a strong reaction, where it's gone up, hit, bounce back down, gone up, hit, and stopped before continuing up again or turning back down. It is not a price level where you see prices go up, break through, come back down, break below, go back up, break around. So it's not where it's occurred, it's where prices had reactions of being bouncing off or stopping at. What I want you to start thinking of support, resistance as the roof, support as the floor. Okay, think about it as a house, resistance is your roof, support is your floor. Let's look at it. There's no exact support or resistance price levels. At this point, which level looks like a floor or support to you? Is it the red line, the green line, or the blue line? The red line, the green line, or the blue line? A floor is always, how we describe a floor is where price would hit and bounce off, right? If you throw something on the floor, it's going to hit and bounce off. If you throw something at a roof, it's going to hit and bounce back down again. So which level looks like a floor to you? Red, green, or blue? If you chose either the red, green, or blue, you're right. Remember, I said that there are no exact prices when it comes to support resistance lines. If we had everyone draw in a line where they think it was a support level, would have so many lines that it would have formed that whole gray area in there. And it would be all in between the blue and the red lines, it would be all in that area. And because everyone can see that price has bounced off that area at least once, they would have drawn a line there. So because of this, I'd rather you start thinking of support and resistance instead of one price. Start thinking of it as an area. Start thinking of it as an area. And this area should not be more than 50 pips. Remember, this is very important. The size of your support area or your resistance area should not be more than 50 pips. The reason why I say it should not be more than 50 pips is because if it's too big, you end up being tempted to enter a trade within that area. You think that it's big enough, you can enter a trade and try and make a few pips within that area. What I actually prefer is that when you see prices close to or in your support or resistance area, stay out, stay away. Don't enter a trade until it has bounced out above or out below that support or resistance area before you jump into a trade. This is crucial because you don't want to be entering a trade at the floor thinking that it will break lower or thinking it will bounce higher. You want to enter a trade only when it's broken through or bounced off. Remember, a price level, a support level can also be a resistance level. If you have broken through the floor, that floor is now your resistance. That floor is now your roof. You can see an example here on the right side. One time it's come down, tried to break. The next time it broke, that's going to be your resistance level. And this is crucial because you do not want to expect support or resistance levels to break. This is going to be very tempting to a lot of you trading for the first time or even for experienced traders, where you'll be looking at price move strongly down towards your support and you feel that because it's moving so strongly towards support, it is sure to break the support level. What happens is, it doesn't. What happens is, you should not expect it to break. I've seen so many times where price moves strongly towards the support level, stops right there, and bounces. So I would always suggest that once it comes close, even close to your support level, if you have a trade, close it out, let it bounce before you look to buy, or let it break lower before you look to sell. So how do you draw support and resistance lines? First, always draw it on the H4 time frame. Always on the H4 chart. Then, step 2, place a line at the highest point and also the lowest point. Then from there, you start placing lines at the next higher or next lower turning points, looking for turning points that should look like that or a V shape. Obviously, the more V shapes or the more points that you have, turning points that you have on the line, the stronger the line is going to be. And then you keep repeating step 3 over and over again until you have between your support resistance lines between 150 to 200 pips between support and resistance areas. That is that open area between those, the open parts between those areas where I'm indicating right now. All right, so things to remember: start on H4 time frame, place a line at the highest point and the lowest point, and then start identifying turning points in between those highest and lowest points until you have 150 to 200 pips in between those areas. Remember, your support resistance zones should be no more than 50 pips. Points to note: you will get the best support resistance lines only through practice and refinement. Okay, trust your lines. You have to practice, you have to draw, you have to redraw, you have to adjust them. But as you work through them, I can tell you that you will not believe in your lines straight away. You will hold on to your lines, you have those lines, you keep adjusting, and as you go along and you see how price reacts to your lines, you start developing that trust. Step 2 is always understand that your lines represent a zone. So you're not so fixed on having one line. You're not so fixed on having one price. You can just put a line and you understand that in that area, that's where you have to be careful. Your support or resistance area, that's where you have to be careful. And then look for turning points where price has hit, stop, and turn back, or hit, stop, and turn back. Not places of occurrence where it's hit and bounced around without any directions. Okay, so remember, practice, review, and trust your lines.